Welcome everyone to Vested Interest. This is Shane back again for another portfolio update. We do these every week here. This one is for the week of January 4th, Sunday, January 14th. And a special thank you to those who subscribe to the channel. I really do appreciate it. The channel continues to grow because of people like you. And for those of you who may be stopping by for the first time on this channel, we focus on dividend growth investing, buying stocks in good companies that pay growing dividends, hold them for the long term. It's really not rocket science. Best way, in my opinion, to do anything is keep it as simple as possible. So it really boils down to consistently investing, dollar cost average into dividend growth stocks in growing companies with positive cash flow that covers the dividend and have a high return on their invested capital. I cover all my investments and activity in the portfolio on this channel on a weekly basis. There is no paid Patreon or other subscription sites to go to. I'm not trying to sell you any courses. If you want to help out the channel, hitting that subscribe button down below, dropping a comment in the comment section, and hitting the notification bell so you're notified whenever we put out any new content, as well as sharing the videos with anyone who else may be a dividend growth investor that you think might find value in the content. We did add $1,498 to the portfolio this week. Let's jump right in. Before we do that, if you would, if you find value in the content, hit the thumbs up. If you're a dividend growth investor, hit that thumbs up. If you're new, hit the subscribe button. And again, hit that notification bell. It really does help out a small YouTube channel like me grow with the YouTube algorithms. And watch to the end if you could, and share with anyone you think might find value in the content. Really appreciate that. Now, no options this week. Again, we threw out a couple more. No one bit. I may look to get out of the few options I was running, kind of a wheel on Bank of America. It's been up and down here lately, so I may look at some other options to jump into here this weekend. I've got a 3-day weekend, so it'll give me a little bit more time to look around, but nothing to report on this week. Now to the first dividend payment received January 11th. We received $147.90 from Medical Properties Trust, ticker MPW, and we have the drip set on the portfolio, so that just means automatically anytime a company pays out dividends like this $147.90, it goes right back into the same company and buys more shares. In this case, it picked up 41.20431 more shares of Medical Property Trust, and those 41.2 shares add an additional $24.72 in passive income over the next calendar year. So this next dividend is going to be much higher than it is now, and if it stays low, we picked up these shares at $3.58. If it stays low, we're really going to pick up another big chunk of shares, and this position is going to get really large very quickly, and these dividends are going to pile up pretty quick as well. So very excited to see that. This is a very high dividend yielder right now. I don't think they are going to cut. There is some potential downside risk on this one, and this is out of the REITs and real estate sector. This one here is a healthcare REIT. That's what they specialize in, and I am really excited about this one. I have not really been adding much to this one, but I am going to let this dividend snowball do its thing, and it really, really is kicking into high gear right now. Now, we also received dividends from Realty Income, another REIT here, ticker O, the monthly paying REIT. On January 12th, we received $50.73. And same thing, any company pays out dividends, those dividends go right back in. Picked up 0.85464 more shares of Realty Income at $59.35 per share. Getting very close to being able to pick up one full share every time this company pays out. And since it's a monthly paying REIT, that will mean I will pick up one share every month for at least 12 shares a year. Really, really, this is another one that's really starting to grow in that dividend snowball. You can see that impact. This 0.85464 shares picked up an additional $2.64 over the next calendar year. Now we are into the first additions to the portfolio. We added $1,185.05 on January 11th. And with those funds, we picked up 10 more shares of Kroger, ticker KR. This is out of the consumer staple sector. We picked up those shares at $45.96 per share. Very close to hitting 100 shares of Kroger. I'll probably run it to 110, 120 maybe. If I can continue to get it in the 45s, it's starting to creep up there. It's harder for me to find days where it's back in the 45s. It's starting to sit in the low 46s to mid 46s, kind of bounces in between there. I'd love to get this back in the low 45 44s even, or 43s. I'd like a bit of more of a pullback, but I'm going to hit 100 shares and then I'm going to look at and see where it's at, and I might pull back, might run it to 110 or 120. Depends. It's got to stay under 46. It starts getting to 46, it's hard for me to add to this position. 10 more shares of the newest position in the portfolio, Alibaba Group, ticker BABA. Now, this is a Chinese company, so there are some political implications around a company like this. If we had issues with China or happened to go to war or something like that, this one could get frozen on the stock market, or even you wouldn't lose your money because I've talked to my brokers. At a minimum, if they stop trading this company, then you would get the money you have in the company back as cash and be able to roll it into another position. But I don't think that's going to happen. We picked up 10 more shares of BABA for $72.55. This is another one I'd like to run to 100 shares and then maybe look to see how it's doing and back off, especially at the prices it is right now. Anything under $80 for this one, I'm buying, and I'm going to continue to adding, like I said, at least till I get to 100 shares. And these 20 new shares in existing positions added an additional $21.60 in passive income to the portfolio. And we weren't done. We went back in and added another $313.22 on January 12th, and we picked up the ones. We are going to do this all year. At least one share of SCHD, Schwab's ETF, Dividend Growth ETF, and then VTI, Vanguard Total Stock Market. This is all of the stocks in the United States stocks market in one ETF. So we're going to pick at least one share each week, every Friday, of both of these ETFs. So we added one share of SCHD at $76.20, and we added one share of VTI at $237.02. And these two new shares and that $313.22 added an additional $6.96 in passive income. All total invested, we put in $1,498.27 in new capital, and we got back $55.92 in passive income over the next calendar year. This does include the dividend, the income from the dividends received as well that accumulated over the next year. So total passive income added to the portfolio this week, $55.92. Really like to see that, and it grows every week. Like the dividends paid out, the funds I add into it, if we get any options, that goes right into the portfolio. And whenever the companies in the portfolio increase their dividends over time as well. Very, very fun to see the snowball and the passive income come weekly and continue to grow. Now, quick portfolio update. We'll run through the sector weights here. Communications is sitting at 8.87% of the portfolio. Consumer discretionary, 2.48%. Consumer staples, 11.73% of the portfolio. Energy is sitting at 6.59%. I've really got my eyes on ExxonMobil. It has dropped under $100, and if it was to happen to drop under 90, I would definitely be looking to add ExxonMobil back into the portfolio. Financial sitting at 7.99%. A couple companies here that I'm looking at. I like Visa, but I think it's a little overpriced, and I think I might like MasterCard a little bit more. I also like American Express. I will probably only pick out one or two of the three, but I'm leaning towards MasterCard and American Express adding in this sector if they were to pull back a little bit as well in the financials. Healthcare is the largest piece of the pie at 17.56%. Industrials is sitting in Pfizer, still looks very attractive in the healthcare sector. Industrials sitting at 7.83%. I am looking for an addition in this piece of the pie here as well. Technology, always looking for a good technology company, sits at 7.71% of the portfolio. Materials makes up 12.23%. It is sitting in second place. Utilities at 4.96%. I'm looking at a couple different companies here in the material or the utility sector as well. I'd like to add at least one more, if not two more positions there over the next calendar year. And REITs and real estate sitting in third place at 11.76%. And there it is. We do have the month or the weekly challenge this year. We are going to be buying two ETFs, SCHD and VTI. Join me in this challenge. If you have not started investing, this is a very easy way to start investing in a basket of stocks. Get your foot. You don't have to do any research into individual stocks. You can just set it and forget it. Every Friday or every Monday or every 2 weeks, whenever you get paid, or once a month, whatever you can afford, buy one share of STHD or one share of VTI or even one share of VU or another ETF that you might like. But that is the challenge for this year. I'm going to be buying at least one share of SCHD and one of VTI. So join me in this challenge for the year. It's just the second week, so it wouldn't be like you're missing very much. And if you have joined that challenge, drop a comment down below and let me know. Now, here is what you came to see. A lot of you like to see the weekly updates of the overall portfolio, and I think it's important to see an actual portfolio built out over time so you can see the ups and downs of the market. You know, it's not like you're just going to buy something and it's going to shoot to the moon. That would be nice, but the market does have ups and downs and ebbs and flows, and sometimes one sector is up and one sector is down, and in my opinion, that's a time to jump in and find value in that sector that may be pulling back, right? I don't mind the red. A lot of times, if their company is still doing in good shape and it meets the criteria still that you set out, it just presents a buying opportunity, right? Now, if something changes with the company, they get into financial trouble or something like that, then maybe it's time to look to cut that company. But don't just cut a company out of your portfolio because you're down 58.89% like I am with MPW. I'm not getting rid of that position. You just saw I got 41 shares, $150 in dividends this week from this company. So I really like that. And it has a crazy 17.44% dividend yield right now. Now, I'm not telling you to go dividend chase, and the dividend yield was not this high whenever I bought it, but it has continued to pull back 3.44%. There's a lot of short interest in it right now, which really drags down stocks regardless. And there are some financial implications around one of the companies that is paying their rent, but I am not as concerned with it, and I am willing to continue to ride this one out. So just because you see red in your portfolio does not necessarily mean you should bail on the company if it still meets your investing criteria. But let's keep rolling through here. This is the ticker of the companies in the portfolio. Total shares I have as of the close of business on Friday. Current price as of the close of business on Friday. The market value, how much market value is it? So that's basically just the total shares times the current price. My average share cost right here, my purchase price, so how much I have into each position, whether I'm up or down. I'm going to show you. If I'm down in positions, you're going to be able to see it. Everything in red I'm down on. If I'm up in positions, you're going to be able to see it, right? So I want you to see the ups and downs of the market. And it is interesting to watch the ups and downs of the market. You can kind of see how the market shifts out of some sectors at time into other sectors and rotates. I never understood the term rotate. The market's rotating, but now I kind of can see that. You know, healthcare is really a hot sector sometimes of the year, and then oil and gas seems like when you get towards the winter, they sell off because everyone's stored their oil and gas for the winter. So there are ebbs and flows to the market that are interesting to see. Whether it's a quarterly, monthly, semi-annual payer, you'll see here current dividend yield, my yield on cost in this column, the portfolio weighting. So what we saw on the previous slide was the sector weightings. This is by each position. Estimated annual income. I would love to look down this column someday and see every single one of these positions paying $1,000 in dividends, right? That would be nice to see it. At least every one of these, or half of them even. You've got some that are getting there. Is paying $617 a year in dividends right now. What's this one? OHI is paying $742, so it's getting close to $1,000 a year in dividends. Verizon is paying $833 in dividends. So I love to look down this column and see this growth week over week, month over month, quarter over quarter. So currently I'm sitting on 5,875.033 shares total. The portfolio is worth $203,162.46. I have $199,957.40 of my own money invested into the portfolio. It's currently up $3,205 or 0.06 cents. And I do not focus on this. You'll see the same thing whenever it was down 4 or 5%, one time up 6% sometimes, back to down to 1.6%. I don't focus on this. I focus on this over here. That's why I have it circled in red. Current dividend yield sitting at 4.57%. Yield on cost 4.63%. A little bit higher than its current dividend yield. Starting to see a few more positions in the red that are presenting some buying opportunities. Even some still in the green that are presenting some buying. And this SCHD, I don't care. VTI, I don't care if it's in the green or above my cost basis. Again, I'm going to purchase one share a week every Friday. And this red circle right here, this is what it's all about in my opinion, whether the market's up, whether the market's down, whether the market is floating sideways. The passive income provided by all the positions in the portfolio sits at $9,285.02, and this continues to grow week over week, month over month, quarter over quarter, and is what I am really focused on. I am focused on building a cash machine, and eventually this cash is what I'm going to retire on. This passive income provided by all the positions in the portfolio. And it should grow on average right now at 6.7% year over year. Well, that is it for this one. Appreciate you stopping by. I really appreciate everyone who's subscribed to the channel. You guys are awesome. I am almost to 1,000 subscribers, over 700, not quite to 800 subscribers yet. So if you have made it this far in the video, hit that subscribe button if you've not done so already. Join us on this journey to financial freedom. Join the vested interest community, building a community of like-minded dividend growth investors. I share my portfolio like this every Sunday so you can see a real portfolio built out over time, all the positions I'm in, any mistakes I've made, things I'm doing right. Again, I'm going to share it out in the open so that you can see, and hopefully it inspires someone out there who has not started their dividend investing journey that you can do it too. I am just an average person. I do not have a background in finance. You know, my parents don't have a big fancy house and a lot of money. I grew up in a double wide trailer, so I didn't really have anyone to look up to or kind of see how something like this was done or know anything about it. I've done this all on my own. So hopefully this helps someone out there. Again, I really do appreciate you. And I do personally read and respond to the comments. I'm always interested to read your questions, opinions, or suggestions for future topics. I do a stock pick of the day video series as well, Monday through Thursday. So if you have a company you'd like me to review, go ahead and drop that down in the comments as well. And this is Shane signing off, wishing peace and prosperity to you and yours. And remember, financial security comes to those who take a vested interest. Hey, thanks for stopping by, and we'll see you in the next one. I'm not a financial advisor. Nothing in this presentation should be considered financial advice. I'm only sharing my opinion and investing journey for educational and entertainment purposes. Investing involves risk and money. You should never invest any amount of comfortable losing. Always do your own research, invest based on your situation, circumstances, and select criteria. Or seek the advice and counsel of a certified financial advisor.